I'm Michael Henley, the CEO and founder of Brandywine Oak Private Wealth. I'm joined once again by Matt D'Amelio, one of the top estate attorneys in the industry. Today we're going to talk about the difference between Delaware and Pennsylvania residency. Now, from an income tax standpoint, Matt, we all know that Delaware has 6.6% rate, Pennsylvania is 3.07%, but Pennsylvania does not tax retirement income, where Delaware taxes retirement income, etc. Let's talk about estate planning, though. Probate in Delaware versus probate in Pennsylvania. What are the considerations there?
Probate in Delaware is a little bit more onerous than Pennsylvania. Delaware probate is a percentage. Their probate fee is 2% of the probate estate. Pennsylvania has a scale that's based on the total assets, but the amount of the probate fees due are substantially less in Pennsylvania.
The joke that we always make, Matt, with clients is basically, work in Delaware, retire to Pennsylvania, because Pennsylvania does not tax retirement income. But then when one spouse passes away, move back to Delaware to avoid the inheritance tax. So if you die with $1 million in Delaware, subject to probate, your kids are going to pay $20,000 in probate expenses?
That's right, $20,000 of probate fees. Of course, probate fees can be avoided with proper planning.
Okay, got it. What are considerations when inheriting wealth from a Delaware versus Pennsylvania resident?
Well, a Pennsylvania resident is going to be subject to the Pennsylvania inheritance tax. And that's a tax based on who receives it. Spouses are subject to a 0% rate. Children and more remote issue are subject to a 4.5% rate. And then friends and collaterals are subject to a 15% rate.
Got it.
Delaware does not have an inheritance tax. So nor does Delaware have an estate tax.
Okay, got it. What are strategies to avoid the Pennsylvania inheritance tax?
The use of irrevocable trust could work, right? That requires a gift of assets from the Pennsylvania resident to this trust and relinquishing control and beneficial interest in those assets. Regular gifts work as long as that gift is made not within 1 year of death. Otherwise, it gets pulled back in.
Okay.
And sometimes making assets joint could work again outside of 1 year. There are some other risks associated with putting assets in joint name, but it will reduce the inheritance tax.
Okay, so if I have $3 million, live in Pennsylvania, I could theoretically gift that $3 million down to my kids and live a year and a day, then avoid the Pennsylvania inheritance tax?
That's correct.
If I'm a Florida resident, I live in Florida full time, but basically I have a second home in Pennsylvania, and I pass away, would my second home in Pennsylvania get hit with inheritance tax?
It would. The real property located in Pennsylvania would be subject to Pennsylvania inheritance tax. The assets that are located in Florida would not be subject to Pennsylvania inheritance tax.
Okay, so basically anything you own in Pennsylvania kind of gets stuck with inheritance tax. Okay,
that's correct.
Got it. What about assets left if you're a Pennsylvania resident to charity? There's no inheritance tax there, right?
Assets passing to charity are subject to a 0% tax.
All right, well, thanks everyone for joining. If you have any further questions about Delaware versus Pennsylvania or your current estate plan, feel free to scan the QR code to see how we can help.